everyone. I want to talk about some investing myths today because I've been talking to my followers the past few days and asking them what is holding them back from investing, and I get the same answers like I don't have enough money, I don't know how to analyze stocks, and I need to pay off debt first. I'm going to talk about all of those things. Before I started investing, and I started investing at 19 years old, but sitting at your computer and making money and growing your money on your computer was so attractive to me. So I asked my dad what he thought about investing, and funny enough, he told me not to invest. And so when an adult tells me not to invest, I was 18 at that time. So when an adult tells me not to do something, especially my dad, I wasn't gonna do it. But still, investing did intrigue me, so when I was working as a dental assistant, I talked to the dentist there about investing, and he told me not to invest as well because he has invested $10,000 into a telecom company a while ago that has went bankrupt, so he lost $10,000, and so he swore to himself that he was never going to invest, and so my investing dreams were crushed again. And then when I moved out of my house at 19 years old, my roommates started talking about investing in penny stocks and things like that. And so again, I got intrigued, but I did do a lot of research and due diligence, and I did come to the conclusion that investing is actually not that hard as long as you're doing it in the correct way. And the correct way is actually not hard at all. Of course, I didn't invest into any penny stocks, but I did want to find a way to make my money work for me and grow my savings. I've been investing for 6 to 7 years now, and I've collected a lot of evidence and learned a lot, so I wanted to come on here and talk about these myths that beginner investors have that I've had as well. Let's get into it. Also, you guys, I didn't do any formal planning or scripting, so I'm just going to look at the notes app. I wrote down everything that I had in my brain. Keep in mind that I'm not a financial advisor or an expert, I'm just speaking from my experience. So investing myth number 1, in no particular order, is you need to know how to analyze stocks. You actually don't need to analyze stocks and sit there and read through their financial statements. You can actually buy what's called ETFs. They're a basket of stocks all in one, so you don't have to go and choose which stock to buy. The S&P 500, for example, is the most popular stock that people own, and that holds the 500 largest companies in the US. The S&P 500 generally yields returns from 7 to 12%. I buy the S&P 500 every single month. I didn't go and choose 500 companies, they're just the top 500 in the US. And even if one stock goes bankrupt or fails, at least I still have 499 other stocks in my portfolio. So no, you don't have to individually choose stocks. Myth number 2, I will lose all my money if the stock market crashes. And people say this a lot. I got a lot to say about this myth. I'm actually going to look up how many times the stock market has failed the past 10 years. Looking at how many times the stock market has crashed the last 20-ish years is 3 times. So the dot-com bubble in the 2000s, financial crisis in 2008, and the 2020 COVID stock market crash. Stock market crash just means that the market is down 10 to 20%. The way I see it is that when you buy a car for $10,000-$20,000 and you drive it off the lot, people always say that you lose 10% value as soon as you drive it off the lot. And after a year, you lose another 10 to 20%. But people buy cars all the time where they know they're going to lose 10 to 20%, but they won't invest in the S&P 500 that would yield them 8 to 12% every year. That's crazy. Stock market crashes and recessions are where millionaires are made. People always understand it better when I use houses as examples. So imagine buying many houses for 10 to 20% off their houses on sale. Stocks are just on a smaller scale. Myth number 3 is I keep losing money. Well, I guess it isn't a myth if you're actually losing money. But I will say this one thing. I don't know anybody who has actually lost money when they invest in the S&P 500. There's a difference between unrealized losses and realized losses. Let me quickly explain what realized losses and unrealized losses are, again with the house example. Say you buy a house for $500,000. Honestly, the amount doesn't even matter, but all of a sudden your house goes down 10%, 20%. So now your house is worth 10 to 20% less than what you originally bought it for. But does that mean that you lost money? Well, the short answer is no. If you keep the house, you live in it, or you rent it out, there is still potential for that house to increase. And it usually does. So the difference between you actually losing money is whether you sell the house or not. If you sold it at 10 to 20% less, then yes, you actually lost money. But if you kept the house and held on to the house, technically you didn't lose money. That is the same exact concept for stocks. Stocks go up and down all the time, but as long as you don't sell those stocks, you still own that asset, which means you don't lose money. I'm looking at the S&P 500, specifically the Vanguard S&P 500. Even if you bought this ETF at an all-time high, literally the highest it's ever been in 2020 on February 14th, happy Valentine's Day, it was valued at $79.62. You guys know now that the stock market crashed 1 month later, March 20th, 2022, because of COVID. It dropped around 26%. That is freaking scary. Even if you bought it at an all-time high, if you held on to that ETF today on January 5th, 2024, it's valued at $111.10. That's a 39% increase. Moral of the story, if you don't realize or if you don't sell your stocks or ETFs, you're actually not losing money. You just have to be patient. Actually, here's another point. If you bought even more shares of the S&P 500 when it crashed on March 20th, your money would have gone up 52%. Myth number 4 is owning a lot of different stocks means diversification. There are many different ways to diversify your portfolio. I can think of 3 ways where you can own a lot of stocks or ETFs but still not be diversified. Here's one. If you bought TD Bank, RBC, CIBC, BMO, yes, that is 4 different stocks, but you're still in the same financial sector. So when the banks don't do well, your portfolio of all banks would be down. Here's another example. There are ETFs that hold the same exact stocks. For an example, the Vanguard S&P 500 holds the top 500 companies in the US. BMO's S&P 500 holds the top 500 companies in the US. Horizon's S&P 500 holds the top 500 companies in the US. So if you bought all 3 of these ETFs, you're not really diversifying. Here's another broader example. If you own all US stocks or only own all Canadian stocks, that's still not diversification. You would want to own stocks in Asia, Europe, and Australia. Don't put all your eggs in one basket. Myth number 5 is you need a lot of money to invest. I really hope you guys don't think this. If you saved $50 a month for 4 years, you'll have $2,450. But if you invested the $50 every month, you would end up with more than $3,000. That's only after 4 years. If it was after 10 years, you would have saved $6,050 without investing. But if you invested it, it would be $10,202.53. And hopefully, every year that you're making more and more money, you would invest more money. So instead of investing $50, you're investing $100 and it compounds very quickly. I'm not gonna get into this a whole lot because I can go off on this topic. Long story, math calculations short, your most valuable asset in the stock market is time, not money. I did a video where person A invests $200 at 25 years old. After 40 years, when they're retiring at 65, they're a millionaire. Person B wants to play catch up and they invest $400, so double what person A invested, and she only ends up with $850,000. Person B actually invested more money but got less in return from the stock market. Person A invested less than person B, but they started early enough. Myth number 6 is that you need to pay off all your debt before you start investing. This really depends on the interest rate on your debt. Again, the stock market yields 7 to 8 to 12% in returns. So if you have low interest debt that's less than 7%, you should simultaneously pay off debt and invest at the same time. I believe student debt is low interest, mortgage is definitely low interest, credit card debt is high interest, so definitely pay that off as soon as possible. You don't only want to be paying off student loans where they're at 3%, you want to also make 7, 8, 12% in the S&P 500. Okay, last myth that people still argue with me about is that investing is a method to get rich quick. So high risk, high reward. 99% of the time, you will lose your money. If someone somewhere is telling you that they're going to 1000x your money, you need to run. The only valid argument that I can come up with are day traders. Some day traders can make thousands of dollars a day, maybe, but that's still, in my opinion, not a get-rich-quick scheme. You gotta look at everything they did before they got to that point. They've probably lost thousands and thousands of dollars, and they probably put years and years of their life to learn technical analysis. So really, that's actually the opposite of get rich quick. You're losing thousands and thousands of dollars to learn, and you're not giving up, but you're giving years and years of your life to learn as well, to generate those kind of returns. Long story short, day trading is not a get rich quick method either. I do have a lot of respect for day traders though. They must have learned day and night and lost thousands of dollars and went through those emotions. If you're scared of investing, don't be. It's actually not that hard. I make investing easy for beginner investors because I know what it was like to research things and understand nothing. So make sure you're following me. I always say if you can buy a product on the Amazon app, you can buy a stock on a brokerage app. Also, you guys can see all the stocks I own and get live notifications on whenever I buy and sell stocks for free. I'll leave the link to Blossom down below. Hopefully this video motivates you to start investing, and super sorry if my thoughts were everywhere during this video.